From the plains to the rolling hills, Oklahoma is a state that resonates with stories of resilience, determination, and pride. Welcome to Inside the 1581, a podcast of the Oklahoma Hospital Association. Together, we'll dive deep into the heartbeat of the great state of Oklahoma as we journey through the rich history, diverse culture, and the ever-evolving landscape within the 1,581 miles of border in our nation's 20th largest state. Each episode of Inside the 1581 will feature conversations with the many voices which help shape our state's future and our shared vision of improving health and healthcare in Oklahoma.
Welcome to this edition of Inside the 1581. I'm Rich Rasmussen. I'm the president and CEO of the Oklahoma Hospital Association, and I'm delighted to be able to spend a little bit of time with our guests today talking about the growing importance of long-term care financial planning. And so joining me in this episode, we're going to take some time to talk about that. And I know for myself personally is having just gone through managing my mom's estate and her passing. Thankfully, we were able to keep her independent up until 96 years old. But a lot of families don't have that opportunity to be able to keep their family members independent or themselves and looking for solutions to help them in that planning for their aging. And that's what we're going to talk about today. So I am delighted to have joining me here is Sammy Kolbas, who is the regional sales director for Trustmark, correct? Is that right, Sammy?
Yeah, excited
awesome.
to be here. Thanks for having me.
Well, thank you. And we're going to talk a little bit about one of the products you have and what we're doing as an association to make that available to our members. And certainly if there's others that are outside of the hospital community that are interested, there may be ways for them to access this type of coverage as well. And also joining me is John Symcox, who is a certified financial planner and leads the business development at First Fidelity Bank. And John, you're way away from us in Phoenix, correct?
That is correct. Yeah. John Symcox.
Symcox. Gosh, John, I blew that one, didn't I?
That's okay. That's okay.
But I promise I won't blow it again.
We can fix it in post, right?
There you go. We always say it, fix it in post. Well, thank you guys for being here. And I'm just delighted that we can have this chance to kind of talk about, the importance of our own financial planning and certainly in long-term care. So before we get going, Sammy, tell us a little bit about yourself and a little bit about Trustmark, and then we'll introduce John and we'll kind of get into the story.
Yeah, like I said, excited to be here. I've been in the employee benefits space for about 5 years now, but insurance about 9 years. I've been with Trustmark for over the past year, and I would say just from the long-term care space, just really accelerated the knowledge and really seeing how important this topic is. I'm actually a collegiate athlete turned, insurance professional.
You tickled us. What did you do as a collegiate athlete?
Gymnastics.
Awesome.
Yes.
Awesome.
Yeah.
Okay. Very good.
Kind of a way different path than the sports world, but I really feel like my cup is filled up by doing what I do because the products that we have in the market really truly do matter when you really zero in and see kind of what's going on.
Absolutely. And John, tell us about yourself and the work that you do, certainly for First Fidelity.
Absolutely. But first, I see there's a mug on your desk right there.
Right here.
I don't have one of those.
Shameless promotion.
What is inside the 1581?
John. Well, John, I'll tell you what. Here's the deal. I'll tell you about Inside the 1581, but I'm going to make sure that Ben gets a mug to send to you. Okay. So we'll do that. And we do some, we're back and forth in Phoenix too. So if Ben doesn't get it to you, I'll make a personal trip. So Inside the 1581 is the name of our podcast. And we were sitting here trying to figure out, what are we going to call this thing? And as you do, you kind of spitball ideas. And, I was Googling just different facts about Oklahoma, and I found out there's 1,581 miles of border in the state of Oklahoma. So we're talking about everything that happens inside the 1581. So, John, that's the name, and it's not trademarked. We probably should, Alex, but we have our just beautiful blue mugs that we'll make sure you get one.
Oh, I appreciate that. I've got my Buffalo, very Oklahoma style Buffalo mug going on right now.
Well,
So
and not that I'm correcting or anything, but they're really called bison. I learned that when I
bison.
spent time in
Mhm.
Montana. I was told, they're bison. Um, but
They are
um,
bison.
but we'll make sure the next one you have is an Inside the 1581. So, John,
Perfect.
tell me
Perfect.
about yourself and just very quickly about First Fidelity Bank, and then we'll get into
Sure.
this.
Sure. John Symcox, I'm our Chief Innovation Officer at First Fidelity Bank, and I kind of run a few different areas of our bank through technology, data, and then financial products. And then one of the lanes that I have is the wealth management lane with our team. So I don't directly manage them. I manage the program for financial planning and wealth management. And so we, some of the things that are really big for First Fidelity Bank is just like that holistic aspect of your finances and how does it interact with each other, because every little component kind of works with each other or could work against each other. So my job is to really kind of pull that together through marketing, training, product, and also wealth management and financial planning.
Well, I appreciate that. And just for full disclosure for folks, First Fidelity is anchored here in Oklahoma City. Correct me if I'm wrong,
Yep.
John. And the Oklahoma Hospital Association owns our own insurance agency, OHA Insurance Agency. And we partner with Insurica, which is one of the companies that is aligned with First Fidelity and part of the whole Cameron family of companies. And so we do work together. And it's been a pleasure, working with the folks at Insurica and certainly First Fidelity. But John, let's get started here. One of the things I think we all struggle with as we, either early in our career or as we age and we grow in our career, it is understanding what we can do to plan for our retirement years beyond retirement. Long-term care planning is a part of that. And I think it's the thing that we put on the back shelf. We don't think about it. We don't really have a really good understanding of the cost of skilled nursing if you needed that, or full round-the-clock care in your home if you need that. And in my example, I've been blessed that I was able to help my mom have full-time care in her home as she aged, but not everybody has the ability to do that. And so kind of give us just a little snapshot about, what are some of the misconceptions that people have about, long-term care services?
Yeah, absolutely. I do first want to give my little disclaimer. I am not representing any carriers or even any uh, insurance agents or anything like
And we
that.
appreciate that.
Uh,
Yeah. Truth in advertising.
I
Absolutely. That's great.
True, that's right. And so if you have any questions about what insurance or what direction you should go, you should contact a financial advisor or an insurance agent. So everything I'm telling you is just based off of general terms. So, but yes, some of the misconceptions are really that government Medicaid is going to cover long-term care services, and that could be the case, but the way you get there is actually rather devastating, because you have to basically spend all your assets before you qualify for uh, any kind of long-term care benefits from the government. And so that's a really difficult process, and actually is quite demoralizing for folks that are in that kind of scenario, because they basically have to be impoverished to be able to have the government help. Other sides of it is people think, um, there's, you know, long-term care facilities or care, stay-at-home care or any of those are all equal. They're not all things are, or not all long-term care services are equal in practice. My grandmother's 96 years old right now, and she is in a what do they call it? It's a mental health,
She's a memory care
you
unit.
know, memory care.
Sure.
Yeah. for dementia.
Yeah.
And so, having specialty care like that versus somebody who's just, physically not able to move, those do have cost differentials. And so you don't know where you're going to end up. And so, the what if scenarios really run the spectrum on what you have. And so, that's definitely a big piece, and I'm going through that personally with my grandmother. Luckily, we were able to really plan ahead early, and that's the other thing is, like you said, it's kind of an afterthought, and the reality is it should be. It is so expensive to have care, and the costs have increased so much that you've got to start planning early. And so that's as a in my past life as a wealth management advisor, we always talked about long-term care before we actually talked about some of the other things that we had, because medical and long-term care because of disability or whatever also could be something that happens prematurely.
And I think you're right. I mean, what I think the most folks don't understand is that, to your point initially, John, is that in order to be able to qualify for a nursing home bed in Medicaid, which is, the largest payer for nursing home care, you have to be you have to have no assets, essentially, right?
Yeah,
So
at
you
least
spend
spending down to about
right
$2,000.
exactly.
Like
There's
that.
nothing in the bank. Depending on your state, you may or may not be able to keep your home. No automobile. So it is very, very difficult, or you have to give out all of your assets away long in advance of your illness. And so it doesn't work for a majority of Americans. It's not a solution. But what we want to talk about is what is a potential solution. And I think, Sammy, part of what you guys are doing, and what was interest for the Hospital Association and through our insurance agency to make our team members and our organizations aware, is that you do have the time to plan. And there are solutions out there. And there are some real uniquenesses in terms of what you guys offer. I learned in that conversation that we had on this several weeks ago as we were planning for the show. So why don't we start off with you giving us just a little bit of an indication about why you're seeing employers' interest around long-term care benefits for their employees. It's picked up again in interest from employers to be able to provide this benefit for their employees. And it's probably because we're looking for that one little differential as an employer that makes us more attractive than our competitors, right? And so this may be one. So tell us a little bit about that.
Yeah, I would say specifically in the healthcare industry, we actually work with Eastbridge Consulting, and they do great reporting on, just voluntary benefits. But speaking, specifically to long-term care, healthcare, 26%, I believe, of all healthcare organizations are offering this benefit. And why it's so important, if you really take a step back and you look at the industry of long-term care, from a group perspective, there used to be, a huge standalone long-term care market that started in 1980s. And it pretty much blew up. I would say around 2015 is when all the carriers ended up exiting the market, and we actually just saw the last carrier exit this year, 2026. So it really only lasted about 40 years. So why this conversation is so important right now and what we're doing in the market, long-term care now is being distributed on life insurance. It's just way more stable, right? So when you're looking at the product,
it's probably actuarially easier to measure, as well.
Yeah. So there are a lot of assumptions that were incorrect on the standalone plan, right? And that was the use it or lose it. So they really didn't expect the claims to last as long as they did, especially speaking to, things like Alzheimer's and dementia, where you're not going to come out of that, right? That's a long-term claim right there. They weren't expecting people to actually hold on to the policies, which is interesting because normally, people thinking about long-term care, touching at the older age. But what actually is super interesting, and we have internal data, is 60% of our claimants in long-term care right now are actually under the age of 65. So when we're looking at, financial planning, right, it doesn't just make sense to start thinking about long-term care when you're 45 or 50, right? When you're looking at someone who's in their 30s, you can get a really robust plan from a value, for under $100, and that rate is going to stay the same for your entire life. And that is the other big differentiator from the standalone plans. Being on life insurance, and it's underrated, right? As a life insurance product, it's issue age rated. So the reason why these are so important right now and very relevant in the market is employers see the value that their employees are getting, right? This is a financial wellness tool, essentially, that they're opening up to their employee population. So just a peace of mind type of product, right? And if you're looking at just an employee population, about 4 in 10 employees are current caregivers. So again, it's just really relevant because they're in that sandwich generation. They're taking care of their parents, and they see there's no plan, so they're thinking of themselves.
Yeah, and that's a really good point, because there's probably tax benefits being an insurance policy too, I would assume. I would refer to John on that
one.
John, I'd be curious on your thoughts on this, because one of the frustrations that I had, and I think it is a genuine conversation that boomers and their children are having about grandma, or potentially mom and dad too, is how are we going to plan for their long-term care? And what is missing is this conversation on the federal level, because I don't think federal policy makers are really zeroing in on this. We know that Social Security is going to come up to the cliff here in a few years. They're going to have to fix Social Security. And I think this one is right there with so many boomers. I'm the last of the boomer generation, born in 1964. And there's so many of them that are going to be entering into this space of being an elder in this country. And we don't have a tax policy that really, is designed to support this, because we won't have enough nursing home beds. Right. And so you would think we could come up with a policy so that we can stay and continue to age with dignity in our homes. And because we're absent a real policy on this, really the only options we have are instruments like long-term care insurance to help us with this. And so John, maybe you can chime in here, from an advisor standpoint, what makes a hybrid long-term care policy more financially predictable for employees? And we'll kind of tease that out a little bit, because I learned a lot, Sammy, when we had our conversation. I want to ask some questions about that. But John, just give us your thoughts on that, why that is more financially predictable for employees.
So a hybrid product, is really designed to really kind of have a core function. And then there's a added benefit on top of it. So you actually are having two different lanes that you're covering, right? So life insurance and long-term care, right? And so with one premium, the employee or the employer, depending on how that goes, is able to offer a benefit that has, a life insurance component. And then it also comes with that added benefit of access to capital on the long-term care side, right? And I think that's the key factor, that when you say how is it, enticing to an employee or to, somebody purchasing a hybrid product, is that if you're buying a term insurance policy, your term insurance premium goes to pay for a life insurance policy, and you'll never see the funds on it. That's for your family, no matter if it
so you hit the deadline, and it expires at a certain age, right? And it's gone. Right. You paid all the premium, and it was insurance. I mean, to protect you against something catastrophic during those period. Now you're age 70. You no longer have that term policy. Now you're going to be relying, if you have a whole life policy that has a payout, or a long-term care policy. Let's talk about what makes that long-term care policy so attractive, because there are advantages to it than traditional. Obviously, traditional insurance, you only cash it when you die, right? So this, you have the ability to utilize to help offset those costs for your long-term care needs, whether it's in home or skilled nursing. So let's talk about the nuances of why that is so important for folks in their financial planning. I'll start with Sammy. We'll come back to you then on that, John.
Yeah.
I think it's so important, and I'll kind of reiterate what I said earlier, and why that standalone plan blew up is long-term care. Yes, it can touch you in your older years, but being on life insurance, right? They understand how to underwrite that. We've been having, I mean, even for Trustmark, we opened our life insurance department in 1940, right? If you look at the timeline of when the standalone market, from the group standalone market was 1980 to 2015, right? Barely almost 30 years. Just the assumptions, you can't, there is no crystal ball of when you're going to be in a long-term care situation, right? Now with people with cell phones.
So let's talk about that, because you could have a catastrophic illness or
Yes.
injury before you retire. So
Yeah.
having it earlier does allow that benefit to begin paying, in addition to disability you would have.
Right.
So you have the opportunity to stack some of these benefits,
Yep.
and certainly disability at some point it could expire, or you just don't have enough on disability alone because you need round the clock. God forbid, you have a major traumatic injury. Stacking these, make sure that you have the ability to recover or have the ability to be covered as you continue to go through your care, potentially for the rest of your life.
And Trustmark's product, one big differentiator for us is, you're speaking to the professional care, right? Someone coming into the
Right.
home or you being in a facility. But there's also informal care or family care. And that's something that our product also pays a benefit out for, right? It's going to pay at a less percentage than the formal care, but that's because it is less expensive. But, your loved one taking care of you still does put a burden on them financially. So you're able to cover yourself no matter what type of care you're going to be needing, professional or informal.
That's a really good point. John, you're going to chime in here. I didn't want to cut you off. You were going to chime in here a second ago.
Oh, no, you were talking about stacking, or what we call in financial planning, layering coverages.
I was thinking auto
And so
insurance.
when
Don't
we-
we stack our auto insurance and we layer the rest of it? Isn't that how it works? I'm just kidding. Go ahead. I always watch the ads. It's they're
That's
stacking
right.
your insurance. But go ahead.
But I think that's a brilliant concept of that is very simple, and especially with young people not being exposed to financial strategies the way that past generations probably have been, through conversations about like how do you build your financial plans out. But understanding that like short-term disability, long-term disability, those are extremely important. But that the especially for men are much higher propensity to get injured in the workplace. And so understanding that if you're the breadwinner and you have some thing that happens, because long-term care can be a layered aspect of having care taken for you in the home or facility or whatever. But then you also still have expenses and family expenses, right? And so having a life insurance policy that has the hybrid component really adds value, and it allows you to really kind of take advantage of the different aspects of how complex a claim can actually get for somebody who is, think about 55, and they still peak earning years. They probably still have kids that could be in school, right, or in college. Their spouse may be working still and may have to become the breadwinner, and so who's going to take care of them? And so like you start looking at the aspects of the complexity of a claim. It's not just as simple as, oh, I'm older and I need long-term care services, so let's just call somebody to come in the home and take care of me 3 days a week to make sure that I can do certain things or whatever. Like, there is complexity to these claims that are very hard conversations to have, but they're real, right? And so having that understanding that there is a layer of security in a certain set of products that you own that are insurance based allows you to also have the freedom to be able to go live life and know that, hey, the people you care about, the people you love are going to be taken care of. And if something happens where you need to have care taken for you, you don't become a burden on the family in a way that you don't want to be, right? And it's on your terms, right? And so that's really putting the control back into you and not putting the control into somebody else, right? And that's where it really comes down to planning is a purpose to make sure you're always in control of what direction and what outcomes you have for any kind of circumstance. And long-term care really empowers you to own like what that looks like, whether
And,
it's stay-at-home care or
and I think that's
facility.
important because, as we layer, not stack, but as we layer these different, coverages, certainly the long-term care is a part of it. It's often the afterthought, but it's probably the one that has the biggest impact of quickly eliminating any wealth that you've accumulated for retirement,
Hmm.
right? And it does
Hmm.
put pressure on your dependents if they're to take care of you, or your spouse or your partner. So it does create challenges. And I think as we originally opened up this conversation about how employers are looking for ways to differentiate themselves from their competitors, right? So we're always looking for talent. So whether it's in the hospital and health system field, or in our state as an example, any one of the industries that are represented in Oklahoma, we're looking for talent. And with the exception perhaps of our clinical people that work in our hospitals, the remainder of our talent in our hospitals can easily be swayed and pulled away to go work for energy or for retail or financial, and so we've got to find that way. And so we're finding also that long-term care insurance is something that employers are really examining. They're making available to their employees. And so, from your all's perspective, let's just open this up for the both of your perspective. What would be the biggest reason, other than what I just said, for hospitals and health systems, why they should be considering, offering this as a benefit to their employees? And we'll start with Sammy. We'll go to you, John.
I think it's broadening the benefits package, right? And the word that gets tossed around a lot is financial wellness, right? When this benefit is offered, it's typically isolated outside of the other benefits so that people really get the true value of what's on the table for them. And one of the biggest differentiators between this and then just going and purchasing it, on the open market as an individual is this is guaranteed issue coverage.
Absolutely. So explain that to our listeners if they don't understand that, the importance of guarantee issue. Explain that.
So what's going to be a more relevant term is no medical underwriting.
Correct.
Right. So if your employer is sponsoring a plan, you can, get up to $125,000 of coverage without having to answer any questions. Right. And there's also the opportunity to purchase up, and the medical underwriting, if you want to call it that. And I say that because, depending on the amount that you get, in my world is only 3 to 5 questions, whereas on the individual market, you have to go and you give blood, and it's a whole to do, right?
Right.
The process is a lot more complex. So having an employer-sponsored plan that's available, obviously, from your employer is huge. So you want people to understand what's really on the table again. So the communication and the education part of it is extremely important when you are going to roll out a long-term care product.
So let's keep that thread going, John. So you think about it as a financial planner. If I am looking at saving for my long-term care needs, if something happens, obviously I'm going to draw down from that. If I purchase health insurance, a long-term care insurance as an example, I could purchase it today and purchase that benefit, and tomorrow something happens to me, I have immediate access to that, where it might take me 20 years to accumulate enough investment savings to be able to pay for a year's worth of skilled nursing care or 2 years worth of in-house care. So talk about that if you can, John, just the thought process that I think people should, work through on this versus, trying to save for it, or an insurance product that gives you immediate benefit in the event that you need it immediately.
Yeah, and many of these products, like I said, I'm not talking about any specific product, but there are products out there where, as you pay into them, you get the immediate benefit, but you also say you do pay into it for 10 or 15 years. There is, guarantee cash back on some of them, because you accumulate, value in the insurance policy. There's ones that, are very simple that have, a life insurance component to them. So, at least your family will receive the benefits of everything you put into them. So like leveraging dollars in insurance is really beneficial because what you're doing is you're saying, okay, I can use just my blood, sweat, and tears to put money into different savings or investment accounts, but I can also hedge my lifestyle and say, okay, I'm going to go ahead and do that, but I'm also going to take a small portion of my income and put it into these insurance products for the what if scenario, right? And immediately be able to cover certain things. And then if something does happen, all that blood, sweat, and tears that you would have put into saving, if something does happen, now gets benefit back to you or your family or your beneficiaries in that case. So, especially with a product like a hybrid product that has long-term care on it, it is, life is so unpredictable that, having something that has, you know, not immediate benefit, but the potential of, fairly short-term benefit, is definitely something that, you can't say in your financial plan that, your retirement plan is really set up until, like, who looks at their retirement account and goes, I'm good, other than, some of those super rich out there, right? They're always like, okay, how can I add more to this? How can I gain this? How can I whatever, right? And
Uh,
insurance products cover things where you can say, okay, at least I got that part covered, right?
Right, and that's important. I mean, you're trying to cover your risk even as individuals, businesses, right?
Yeah.
We try to avoid risk as businesses and individuals. We try to do that too. So when we think about this, I'm sure that in those employers that you've all had a chance to to talk to in providing counsel, what are you hearing back from them? So if I am an employer and I'm looking, I've got an intergenerational workforce as an example, right? So I've got folks in their 60s like myself who might be saying, okay, this is an important product that we may want to offer so we can keep them because they have, all that institutional knowledge. They have some very specific skills that it's really hard for us to find today. So I want to have a good blend of employee benefits. So I have something for them. I have something for my younger employees. What are you picking up in terms, Sammy, from employers that are examining the scope of benefits that they're making available to their employees, and where is this falling in that?
Yeah, I think that's an important question because there is misconception sometimes with this product, right? And at the beginning of our conversation, it was about, when you're older and your elder age, right? But this product is extremely attractive. And I hope the listeners understand when we're speaking about hybrid, that means that there is a life insurance component and then also a long-term care component, right? So really the terminology we use when we're speaking to employers is it's long-term care funded by permanent life insurance. So,
So let me give you an example for me in that point. So my term policy is going to expire at age 70. I chose not to extend it, right? I feel like in the event of an untimely death, obviously, it would be untimely, any death is, right? But I would have my my savings and my retirement for my wife. And so for me, it's now planning that layering where I know it's going to expire at 70. So layering in now a long-term care policy. So at the age of 70, I'm picking up the cost for that and losing the cost for that policy at that same time. But it is giving me some insurance, right? But it's also giving me a benefit that can help as I age in the event that I need care in a skilled nursing facility or my spouse needs it or our dependents need it. So is that kind of what we're talking about, and how those kind of flow together, at least in how we should be doing our planning?
It's a holistic strategy, right? So you have basic life normally paid by your employer. You have your supplemental voluntary life, like you said, that expires, and then you have that permanent life coverage, right? All of them very necessary, all of them very important. All of them have, a different strategy when you're looking at your phase of life. So when we're rolling out this product, there is different messaging depending on the demographic that you're speaking to. When you're speaking to your younger employees versus your older employees, the younger employees, you're most likely talking about that life insurance component, right? Whereas, you're 45 and up, you're really more focusing on that long-term care, again, really nailing the fact that this is guaranteed issue coverage. So what we see holistically, and I have a little pie chart here, it's pretty much even across the board, depending on the demographics that are purchasing. Now, they're purchasing for different reasons, but the overall message is that they are purchasing. And again, this is a product that you can take with you, right? It's fully portable. So no matter how your career is changing, so long as you're paying your premiums, that rate is going to stay the same. So you can take it with you.
So
for
that's
your
a
rest
really
of your
good
life.
point. And John, chime in on this too. So because it is portable, just like a 401k, we've got the guarantee issue. So we're now in. You can't take it away as long as we pay our premiums.
Right.
So, that is a pretty powerful incentive for something like this, because with the insurance as a base in it, with the other wraparound benefits around it, it really is kind of the perfect tool you want to have in your toolbox as you continue to age and mature.
Yeah, believe it or not, in conversations with the Gen Z folks that are coming up, they're looking for things that obviously their expectation of lifestyle is really difficult based on the increased costs and things like that. And so things like a portable insurance policy and portable products that they can get through employers. And then this is interesting. I've heard more about like long-term care type conversations when Gen Z doesn't even know what long-term care is.
Right.
They're just talking about, problems like disability, and if things happen, how are they able to, take care of themselves. And, an unfortunate part of it is there is a lot more single or, dual income, no kids, of, different generations, and they don't have the same support systems as older generations, where you do talk about the sandwich generation that has parents and kids and all that kind of stuff. There are folks that are out there that have no plans to have kids, and they need a plan. And so, I've been having conversations that I've never had before about how do you plan for that kind of stuff, where it's building assets to take care of yourself in the what if scenarios. And long-term care is definitely one of the top pieces of that, because like you said, it is also one of the ones that'll drain your wealth faster than anything. So it's
the one thing that keeps you as you age. It does keep you alive.
Yeah.
And even my kids are all in their late 20s, and they're all thinking about will Social Security be here? What happens when we hit the cliff? Will Congress actually fix it? I don't know. I have to have a plan. And it's interesting that when they are making their car payments, when they are making those mortgage payments, everything changes. And and so I think this is certainly a consideration. So let me ask you this question, and we'll kind of wrap it up here. We've seen evolutions of tools like this that individuals and businesses can use. How do you see this long-term care benefit landscape change over the next 5 years? And then what one piece of advice would you give to employers? If employers are looking at this, what advice would you give them in terms of how they weigh this as a potential benefit for their employees?
I see this evolving to where, just like, the basic life conversation, where that's a pretty much a given. Any company is going to fund
Absolutely.
that.
Yep.
I see this being the same.
Guaranteed, coverage as well
Right.
for that as well. Yeah.
I see that being the same way, whether they cover, a full guaranteed issue or, just that first $20,000, at least that's giving them, that entry point into the product and giving them the opportunity to purchase that. I do see this evolving to a benefits package where that is almost a given, just as the basic life being paid for by the employer.
Your thoughts, John?
Yeah, I actually been talking to a bunch of employers about asset-driven benefits. So 401ks are typically the only one that is that builds asset wealth for employees. Everything else is really like health insurance, disability, cancer care, accident. They're all just like expenses that help with the what if, but they don't carry an asset level with them. These products, these permanent life products that have long-term care or whatever, they build your employees wealth out by developing assets, right? And so anything that grows an employee's asset, or portfolio of assets is a much, much larger benefit than just having coverage, right, on something. And I think the younger generations are definitely looking at, I need to own things. I want to stop renting things or leasing things or subscribing to things. And they want to have some sort of like ownership in it. And these permanent policies that have, different features on them, like the long-term care hybrid product, are definitely game changers in that space because they don't have to be super expensive for the employer to provide those or offer those to the employees.
Well, those are all great, message points. And so, before we close, I just want to share with our listeners, and I think maybe Sammy, you might be on this call. We have a webinar coming up. We have a webinar if you're listening and you're an OHA member and you're trying to decide, is this something for your team members? Is this a benefit that you may want to consider making available to your employees? We will have, and you can look in the OHA hotline, and we will be sending this to our hospital leaders as well. But there will be a webinar. We're calling it New Employee Benefit, Long-Term Care Planning, available through OHA Insurance Agency. This will be on April 9th. It's a 30-minute webinar. It will begin at 11:30. Look for the Connect newsletter for more information on that, or certainly you can reply back to Inside the 1581, and we can respond back with you on that information. Alex, I would think maybe we could even put a QR code on the YouTube. I'm looking at him. Yeah, so folks can go right to that, and we'll make that easy if you are interested for your organization learning more about that. Guys, this is very helpful. I'm just sitting here thinking with John. I had this conversation with my daughter yesterday, and we're both looking at our financial planners, and she's trying to figure out if I'm putting money, in this Acorn account over to here, and I can take and move this IRA over there. What does my, compounding interest look like? And I was just thinking here, if I could take that same thing with a long-term care policy like this and have my kids start at 28 or 30 years old and look at what that would mean at 70, right? What the gift that they would leave for their children in the event that they needed long-term care with that compounding interest. I think we don't often look at the power of that. We learn it in business school, but we don't really look at it until we need to look at it. And so we appreciate you guys spending some time talking about this today. And so you've been listening in to this edition of Inside the 1581. Joining me today was Sammy Kolbas, who is the Regional Sales Director for Trustmark. And also joining us is John Symcox. I got it right this time, right, John? Okay. Because I blew it the first time, so I apologize that. He is a certified financial planner and leads the business development at First Fidelity Bank. And he's joining us virtually. John, I hope it's going to be cooler in Phoenix than it has been. I think the last couple of days I've looked at the weather there. I think it was pretty warm, so hopefully you're going to stay cool. But thank you guys for joining us. And as we wrap up, I just want to say thank you for joining us of this edition of Inside the 1581. And I hope you've enjoyed our episode. Again, look for the QR code if you want to learn more about long-term care benefits for your team members in what OHA is doing to help promote that for you as part of your workforce and talent development and retention strategies. Before we go, I want to extend a big thank you to our sponsors at Forefront Healthcare. They've been a long sponsor for Inside the 1581 when we first began, and we do appreciate their support of us. And also our producer, Alex Taylor, who makes this podcast happen. Alex, you did great today. We got the Zoom coming in. We've got 2 microphones going here. We've got the video. We're just so pleased to have him on our team. And also joining us in our support is our Vice President of Strategic Communications, Susie Wallace. She makes sure all of this happens. So please make sure that you subscribe and follow to stay up to date on everything in our future episodes. I also want to mention again, as always, that our music that we're using is from the track Gunslinger from Ends of the Earth. We appreciate the ability to use that music in our podcast. And until next time, look for us. We drop every 2 weeks, and we've got a whole host of podcasts planned over the course of the spring and the summer. So again, thank you for joining us at this edition of Inside the 1581.